after we examined the inverse relationship that we have between the US dollar, Japanese yen to gold, it's now, I think, important to examine also the inverse relationship that we have here between gold and the US dollar, Swiss franc. As I explained earlier in this video, that if we are facing now a genuine breakout in the US dollar, the dollar index, yes, the euro going down a lot, the pound falling, quite a few currencies are caving in to selling pressure as the US dollar is going to shoot higher. We're going evidently to see signs of that US dollar strength also here. Yes, and long-term structure for the US dollar Swiss franc right from the bottom since the day that the Swiss National Bank decoupled the Swiss franc from the euro. Yes, we got that huge spike down and then it came back. We have traced and we could still be in the process of tracing a B. Okay, so we had an A and then an A, B, C, D. That is a reading that favors continuous surge in the US dollar. We are not going to have to wait months and months for confirmation. That's going to potentially happen within a week or two. If the US dollar surge that we have seen in the last 2 days is going to continue, obviously it's going to pop its head above the resistance here, and that's going to be very, very significant. It'll tell us that we are now heading for that C. In the same at the same time, what is likely to take place here in gold? Gold is going to continue to drift sideways and actually come under pressure as it is in the process of creating the E leg. Okay, that's an A, B, C, D, E. I do not expect gold really to break very sharply under this level. If it does, obviously the wave count will have to be treated differently. What I have in mind is that if gold breaks through this level, and I already told you this is very critical level, that zone that you see here, if gold does break through this zone, we're going to have to treat this differently, that is a triangle in this way, and in fact what I think is going to be in fact what we're going to have is an ABCD like that, and gold is going to collapse under the low registered here. But right now my preferred reading is that in fact gold is going to come down. Yes, gold is going to come down to complete the E leg. So the dollar needs, let's say, 6 months, 4 to 6 months. This one wasn't really that long. Yes, it didn't really last like 6 to 8 months, but let's give it 4 to 6 months rally. At the same time, gold will go sideways, will complete that, and when the US dollar Swiss and the dollar index will put in the final touches of the C and will begin an important decline, gold will absolutely soar. Okay, so that is the big picture for the relationship between gold and the US dollar Swiss. It is really an important chart for you to keep an eye on, and the first thing I would suggest you do, you put an alarm at the top registered for you for the US dollar Swiss right here. If you don't follow the market every day, the day that if it pops its head above this level, you're going to get your alert calling you, telling you, hey, look, something happened, an important event. Yes, it is important. It will confirm that we have the C on the way. Okay, that's silver. That's the daily. And silver has come down as I expected. It actually held nicely above support that I indicated, but I want to tell you right away, even though the short-term price action in silver is still very encouraging in terms of developing bull here, I don't think that silver is ready to shoot above this level. It's not ready to shoot above 16.25. No. It rallied for about 1, 2, 3, 3.5 months. Yes, the correction that we have seen here, if it is a correction, is not enough. It's not enough to correct all of that. In terms of in terms of the depth of the decline, yeah, the extent of the decline, yes, but in terms of time, no. And I don't think it's ready to run through the previous high. I could be wrong, but I very much base myself on just common patterns, yes, and we also have massive overhead resistance here. So my conclusion at this point, no, it's not ready to run through. What could happen, silver could run up to the previous high, maybe even go slightly above, but I don't think we will have a huge follow through. Okay, I don't think we're going to have that. I think it's more like it's going to find again resistance and it's going to come down again. And don't forget that we are looking at gold tracing for us that E leg, yes, and we were talking about giving gold perhaps 4 to 6 months to another 4 to 6 months to complete that E leg. What silver is going to do in that time? Well, I can't know for sure what it's going to do, but it seems to me that it won't do it any harm if it's just going to go sideways here between the roof. Let's put it at 16.2 to the floor at around 14.8. If silver does nothing but just going up and down here, while gold is tracing for us multiple small ABCs, we can feel reasonably confident that silver is preparing for an absolute blast above 16.2 once the correction is finished. Okay, I want to go to the 60 minutes so to show you what happened this week and what should not happen in the coming week if our bullish reading is still on, the general bullish reading for silver. If you remember, I took this as an AB and I told you we're going down for a C, and indeed we went down as a 1-2, and I think we had a 1-2 3-4 3-4. That's all on the hourly scale, and I think we may have seen the end of that C, as you can see, and nice surge on Friday. That looks great. Now ideally, if the bull is really in command here, one thing should not happen. It should be very clear to you that you shouldn't come back there. Monday, Tuesday, it has absolutely nothing to do here. No. And it definitely shouldn't come down this week and break 14.7. If it does that, that will cast quite a dark cloud on our bullish reading here. If it does break 14.7 and it begins to go sideways as I presented here, that is a bad sign. That means it wants to go down. Okay. Ideally, what should happen? It should continue with a bias up, may not deliver something like that. Yes, as I already told you, I don't think it's ready to do that. But I think it could definitely continue up in a series of steps, and it could find again resistance around here and go sideways. What I'm basically insinuating is that we are probably looking at another ABC in development. Okay, so something like that. You know, it's very difficult to know ahead of time what it's going to do, but suppose it's going to do something like that, you know, an ABC like that, and then I would expect it to come down again. Okay, so that's my expectation for silver for the next several weeks, if not a few months. Okay, that's the chart of gold, that's the daily. And my preferred reading, just to be clear, is that we are tracing a B. We had our A, and now we have seen an A, B, C, D is behind us, and gold is going to continue to drift sideways and go down. It could go down to this level of support. There is no negative signal generated by doing that. Yes, going down there, but we have to be absolutely on guard. If gold does break 1160, that will be definitely negative and will definitely raise the prospect of silver actually crashing back down to the floor at 10,040 and going potentially a lot lower. At that point, the odds would definitely increase that the alternative wave count that I have here would be the one that we want to follow. with that being an A, that's a B, that's a C, that's a D, and that's the E leg complete. I don't think this is likely. We'll go and see the details. Before I jump to the hourly, I just want to remind you, so basically what I see is that gold is likely just to hang around here for a few months. Really uneventful price action, and that will be actually good news. For those who like to see gold surging, let's say 6 months from now, that will be good news. Going sideways, not doing much, it's telling you it's fulfilling that projection of the E leg, and it's preparing the ground for a surge above this level to give us this huge C. Let's now go and see the 60 minutes. Also gold followed the projection that I had, the short-term reading that I presented here. You remember I told you this is an A, that's a B, we come down, we have a 1, 2, we're going down basically for that C. And yes, it went down, and I think that there is a fair chance that in fact the C is over at this spot. If that's the case, this should not happen. It should not come down. I already warned you yesterday on that. This should not happen. We should not see gold weakening suddenly Monday, Tuesday, and coming down to press 1280. That will be negative news. That will evidently tell us that we have to review the wave count, and further lows are on the horizon immediately. Yes, we are going to see it crashing through that level. It's definitely going to continue down. So we have short-term floor, yeah. But what I think is going to happen, as in the case of silver, I don't think we're going there straight away. I don't think we're going there. I think what's going to happen, it is going to build some sort of ABC, and gradually it's going to find its it's going to find its way to retest potentially the top. Yes, no guarantee, but yeah, it could deliver that, and then down again. Okay, essentially you have to imagine to yourself that it's going to go down the road of creating something that could perhaps look like that. Yes, over quite a few months. So this is a critical level for us to watch. If I'm wrong and silver comes back and it knocks the roof from here and it shoots higher, obviously that will be very bullish, and it will call for reassessment of the wave count, and we may have to consider that we have a breakout potentially coming much earlier than I expect. But for now, this is not my reading. I think that this is the daily again. I think do not be surprised at all to see this happening. So gold going up, creating an ABC, and then coming down again, and then creating another. That's an ABC, 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 and it goes on and on for several months. Okay, that's basically the idea.